Looking at the school finance panel here, my name is Will Flanders. I'm the research director at the Wisconsin Institute for Law and Liberty. And, school finance is obviously a critically important issue, but it's something that, as someone who's worked in education policy up in Wisconsin here for 10 years, there are a few people you talk to that'll say there's like one or two people in the entire state that understand education policy, that understand the school finance. But that's not true. We got three folks here that have a very good understanding of it, and hopefully will help you guys develop some of that understanding as well after the panel. First, I'll introduce Jonathan Mitchell, who's currently in his 6th year as the Director of Business Services for Greendale School District. He finds great satisfaction in mentoring aspiring administrators and business managers, a commitment that was honored in 2020 with the Wisconsin Association of School Board Officials School Board Manager of the Year Award. Jonathan shares his expertise as an adjunct professor at the Milwaukee School of Engineering and Wisconsin Lutheran College. Next, we have Andy Chromy. He is the assistant superintendent with Franklin School Districts. He spent 12 years managing school finance at several districts, from small rural districts to a large urban district. Prior to his role in the business office, he was a teacher with both MPS and South Milwaukee for 13 years. These combined experiences give him a deep understanding of how districts function and the differences within districts. Lastly, we have Bryan Kadlec. Bryan is a business manager working with rural school districts in Wisconsin. Prior to that, he was the Director of Business Operations at Trevor Wilmot Consolidated District in western Kenosha County. Earlier in his career, Bryan was a technology executive with close to 30 years of experience utilizing technology to solve complex business problems for companies in the insurance and finance industry. So, with that, we're going to go through several different sections of discussion here today, and I'll try to sort of frame the discussion in each area a little bit with some sort of broad overview questions. The first area that we're going to look at is with regard to the funds. The funds that you hear about are sort of a key component of school finance, but at least as an outsider, when I first moved up here and was looking at school finance, it was sort of opaque and difficult to understand. So the first thing we want to look at is what are the key funds and what are their purposes? And with that, I'll turn it over.
Perfect. So we just have a couple of questions that we think all school board members should be able to answer, and they're really yes or no questions, but they're things from a financial standpoint that a school board would want to make sure that they understand. So we put it kind of under a Jeopardy kind of theme here. But in thinking about compliance, one of the key pieces with the financial audit every year will be corrective actions. So one of the pieces a school board should know is if there are any corrective actions that have come from your most recent audit, which in this case would be the 23-24 school year, and if there are plans to, or what are the plans to correct those actions. So that would be an important financial piece for a school board to know. Second one would be verifying there's a fund balance policy in the section of board policies regarding finance, and then having an understanding of the key concepts inside of that board policy. Again, I would agree that it would be really hard to know the functions of every board policy, but there are some we'd want to know a little bit tighter than others just from rote memory. And then a third thing that's really important from a school board standpoint is to make sure that the school district is in strong financial standing with DPI. So a simple verification, are all DPI required reports provided to DPI by their required time frame? And again, that's really just yes, we're doing that, or no, we're not. DPI will be following up with districts specifically around those financial pieces that either aren't meeting the guidelines or enrollment issues. They'll be following up, but you should have an understanding if you are meeting those deadlines. From the best practices sideline, do you have your audit posted yearly and your financial reports provided to the board posted monthly for the public to view? And again, an important piece of being transparent is providing that level of financial understanding for the public who would like to see those outside of attending a school board meeting. Do you approve, second one, kind of in that 400 category, does your school board approve a preliminary budget prior to July 1? As technically you are not allowed to pay people or to pay invoices post July 1 if you do not have a preliminary budget approved. And then the last piece, the $600 category, do the people in your finance office have a budget calendar? Are you aware of the budget calendar even at a high level detail? And are you making sure that they're following that budget calendar? So having those deadlines in place. So making sure that your business office is really at least planning for all of the components throughout a fiscal year. So just a couple of best practices we thought we would start with to make sure that we cover those. So passing over to Bryan here. Bryan is going to do our school funds piece.
Good morning, everyone, and thank you for your interest in being here. We are all teachers. Actually, I'm joined by two adjunct professors here. So, but we all see ourselves as teachers. A more informed school board community creates better transparency across the board. So we're happy to be here to help out with that. With the any financial system is going to start with a chart of accounts. What we follow is a uniform financial accounting requirements of the state of Wisconsin. And I'm going to go through like 4 categories of our funds. The first one is main operating. And so the first one to call out is what we call Fund 10, or that's our general fund. So that is the major operating fund within a school district. It really works very closely with Fund 27, which is our special education fund. So any of the expenses related to teaching children with an IEP, individualized education plan, all comes out of our special education fund. The reason why these are linked is for any expenses that are not met by state aid or federal funds, there is a big transfer, likely a very sizable transfer from our general fund to our special education fund. The other one to call out here is our food service, which is really pretty self-explanatory. Anything that's needed to provide meals to our kids. And then Fund 21 is our student activity. A lot of what we do there, probably not the heart of operations, but we use it a lot for things like it may be a scholarship fund, student activities. The biggest example that I would use is like a Washington, D.C. trip, where our kids will actually fundraise for that. So the expenses are offset there. The next example is debt service, and the main thing here is if your school district has passed a capital referendum, the funds that are needed to pay the principal and interest on those on the loan, if you will, is all taken out of these funds. 38 and 39, there's just some distinguishing factors related to referendum. But right now, I think primarily Fund 39 is the main fund. Capital expansion, there are a few different funds that we use for capital expansion. Fund 41 is something where we would levy out of the revenue limit. Jonathan will be talking about the revenue limit, but essentially that's where that's being funded from. But we also have capital improvements that can be made out of a Fund 46, which starts with a transfer from the general operating fund. It needs 5 years to cure, if you will, before you can start utilizing those funds. And then Fund 49 is really used to house those funds that are part of a capital referendum. So this is going to be where you run through all of your revenue and expense in a referendum itself. The last category is other funds, and the main one here, so there's no real similarities here, but the first is a Fund 73, which looks at more of pension and post-employment benefits. Not all school districts have these, and there's a variation of districts in terms of what their plan setup is. But in essence, this is the trust that holds those funds. Community Service Fund, this is actually funded through a tax levy and can be used in multiple different ways. What it is it opens up to the entire community. So examples of this might be summer recreation for kids that the whole community would be part of. Some of the adult recreation, community education and recreation also comes here. For smaller districts, some will actually run like a middle school athletics program out of this fund. Why? Because sometimes you need more kids to fill out your teams, as an example, so they open it up. So Fund 80, that is again, that fund that we would use for that. And then Fund 99 is what we call a co-op or consortium fund. So examples of things that we might use here is if we share resources with other school districts. So as an example, we would have a sharing agreement of a registered nurse, as an example. We might split that nurse with multiple other schools. This is the place where we would kind of house that and in and out for that work. So I know I just went through that pretty quickly, and we've got a lot of additional topics here, but any questions, additional comments?
I'll just start by saying, there's a comprehensive slide presentation that these panels have put together, and we are going to make it available to everyone afterwards. So don't feel like you have to take extensive notes. Write down what's most relevant to you. But so just one sort of basic question here. How much can money move between these funds, and how much of it is sort of set in place and can't be moved by the school board or by folks?
So there's, again, Fund 10 is probably the main hub of these funds, but for a special education fund, by the end of the year, that has to have a fund balance of 0. So that's required a transfer over from our Fund 10. Food service, in most cases, that's all sustainable within that fund itself. But if for some reason you can't, and then there have been some cases where the general fund has needed to supplement that food service fund, and very similarly to with the Fund 99, that has to have a 0 balance at the end of the year as well, and it typically takes Fund 10 just drawing additional to balance that out. So any other thoughts on this?
No, I think the main point is you're understanding the operational fund and how that functions. It's going to be the main source of funding, and we're going to talk about how that relates to the revenue limit here in a second. So if we can we pivot to that?
Yeah, we'll segue to the revenue limit here. And in terms of understanding school finance, at least from the policy perspective, I think this area is maybe the most critical. And it's a very complex area as well, right? It's something that there's a lot of factors that go into, and it's something that not everything works the way one might generally expect, right? In terms of what the revenue limit does and what changes to maybe state funding, actually what effect that have on district spending. So just sort of a general overview. What we're going to go through here is just how do the state aid and property taxes work together to produce sort of the main school funding, as you can see in the picture that I think was up there for a second, and then what are some of the other aids that go into school funding as well. So with that, I'll turn it over again.
Great. So the revenue limit, the key concept we want from this slide is thinking about the relationship of state aid and property taxes. So each year the state is going to set what that revenue limit is. So we talked about funds a second ago. This impacts your operational fund. It impacts your non-referendum debt and your capital expansion fund. But mainly we're talking about operations, your day-to-day operations for your schools. And the state's going to give you an amount that's going to be the state aid portion. So here we've got the green and the blue picture. So you think about that. The state's going to come forward and fill a certain amount and say this is your per student amount that we're going to allocate in revenue limit via state aid. And then the school board's going to have the ability up to that cap, that revenue cap level, to fill up the rest via property taxes. So then when we're talking about state aid, the vast majority of what we're talking about is equalization aid. That's the main state portion of the revenue limit. And the key point to remember is that's provided based on a formula that looks solely at one thing: property wealth per student. So you think about this, you could be a blue-collar community, St. Francis along the lake, and you have 500 condos that are on the lakefront, and it significantly increases your property value per student, and the state's going to assess that and say now your community has a higher ability to pay, and so you're going to get less in property in equalization aid based on that higher property valuation per student. So you want to know what that ratio looks like for your community. Of your revenue limit, what percentage are you receiving via that equalization aid formula versus how much would need to come through property taxes for your community. So the revenue limit itself was enacted in 1993, and that was a response to increasing property taxes that were increasing much faster than the pace of inflation. And so it was meant to keep districts consistent with a set number that would be an increase each year. So the state legislature would set how much districts could increase their levy. And so that amount is not tied to student need or costs. And so we want to talk about what the impact of that has been over time.
And it's also not always the communities you think that have the highest or lowest revenue limit, right? There's vacation communities tend to have really high revenue limits up along Lake Superior and things like that. And there's some wealthier communities that also have lower revenue limits as well. Right?
Yeah, so really it's tied to what was happening in those communities leading up to 1993, because that became the snapshot. So if you had a high revenue limit in 1993 relative to everyone else, 30 years later, you still have a high revenue limit. And that just relates to how quickly you were increasing that number prior to that being locked in when the revenue limit was put into place. And so why is it becoming an area of concern? There's two main reasons. One is that revenue limit is not keeping pace with the rate of inflation. And then two are demographic trends. And so we're going to talk about enrollment a little bit later. So here's a chart that goes over about 15 years of the pace and change of spendable student increases. And so the revenue limit was put into place in 93. By 1998, the state legislature set a model and said, this is how we're going to index each year increases so that schools can figure out how to plan programming. And so in 1998, the legislature said we're going to set it at $200 per student. Irregardless of what your revenue limit level was at that time, $200 per student per year. And what the legislature said is, in order for schools to plan programming, we'll index it with a CPI number. So each March, we'll utilize that year-over-year CPI number, and we'll increase that $200 amount. So like, what does that mean? So if in year one, it was $200 per student, and the first year there was 3% inflation, it meant in the second year of that model, the per student increase would be $206. And so each year, districts knew that however that inflationary cost was changing, that would be how much that per student number would rise in the revenue limit. And so the legislature utilized that model for about 10 years until 2009, when there was a financial crisis across the country. And at that time, the legislature paused that model. And so the per student amount was about $275 at that time. It had been increasing over that decade period. And what we see here in that blue line represents what actually happened from 2009 forward. And the gray line shows what would happen if that CPI model had just continued over that 15-year period of time. So rather than having that sustainable increase and being able to predict what those increases were, schools received anywhere from a negative number when Act 10 came into place. There were also multiple years of $0 increase all the way up to $325. So there's been a cumulative difference, because if that index number should have been $280 or $300 for a year, and instead the legislature provided $0, that difference carries on over multiple years. And so the pressure that's been created is there's a $3,380 gap from those 15 years just from indexing to the legislature's model. So we also wanted to address other sources of revenue because the question comes up, are there other big buckets of money that we're getting besides the revenue cap? And so there's two big ones that we wanted to talk about. One is per pupil aid, and so that is a separate statewide funding model that runs parallel to the revenue cap itself, but sets a per student amount. So it's not calculated the same way as the revenue limit. And so districts receive a fixed dollar figure per the actual student count in the current school year. And then the special education aid. So special education aid is reimbursements from the prior year spending from aidable costs for providing services for students with an IEP. So it doesn't represent every expenditure that you make within the special education, but there are certain expenditures, and they should make up the vast amount of your spending, certain expenditures that can be reimbursed. In law, that's currently set at a reimbursement level of 33%, but the actual distribution is based off of actual spending versus what the state estimated, and so that actual reimbursement's right at about 30%.
So just a question here when we look at categorical aids, and we obviously had the governor's 400-year veto that's gone into effect. Not to quantify it exactly, but how much does that help close the gap from the earlier slide there?
So if we go, can we go back to that slide? So we are currently, for this next biennium, the estimate would be $415 in year one and $430 in year two. So with the 325, that gap will actually continue to grow if you utilize the prior model.
Thank you.
Yep. So then when we talk about special education, and I mentioned how there's a fixed amount of dollars, but you don't actually get to the specific percentage of reimbursement that's in law. And that's because it is a some certain amount, meaning the state legislature and governor that have approved that budget have set a fixed dollar amount. And if the actual needs ends up being bigger than what that estimate was, then everyone has to share a smaller slice of that pie. So you will see in the news conversations about making that special education fund some sufficient, and that would mean that if the state legislature estimated what those costs would be and they ended up being higher, then they would have to find additional funds within the budget to ensure that that reimbursement was happening at that rate that was in law.
So this is just another concept here in terms of, well, what does it look like? What does a school budget look like? And this is a small school in northeastern Wisconsin. This is a sample. One of the things that you're going to recognize in this is a lot of times we talk about, schools are a people business. We build people, but it's also run by people. So you can tell in this, salaries and benefits is the largest component of the overall operating budget. And going back to funds, this represents both the general fund as well as the special education fund. So all the teachers, support staff, administration. But we also have contracted services. In this example, there are going to be portions of certain roles that we contract out, either personal organizations or state agencies called CESAs for certain roles. So that becomes another big component of the budget. In here also there's a certain amount that is sent out to other schools. And when we talk about other schools, when we talk about vouchers, we receive revenue for vouchers and those are immediately expensed out. But this also includes any open enrollment out with a school district. So you can see for this district, that's the third largest category of expense for the district itself. Then it's maintaining the building itself, so that's everything for utilities, cleaning, fixes, preventative maintenance, etc., transportation, etc. So you can see down the list. So a lot of times people will say we're overfunding schools. On the opposite side, when we talk about schools needing referendum, the question becomes, what can you cut? And so in this example, there's salaries and benefits for teachers where there's a single section per grade level. So there's not a whole lot to cut. And even when you look at things like transportation, let's reduce that. Let's go from 4 routes to 3 routes. Okay, that means actually a school children being on the bus for an hour or an hour and a half, right? So it just gives a little more of a complexion to, the overall budget as you look at it.
And how typical would you say this is more broadly? You mentioned this is a rural district. Would you say this is pretty typical of the budget breakdown for districts of various sizes?
I think certainly rural districts have challenges, probably more so in terms of competing for things like talent, transportation. It tends to be a larger geographic area that you don't have with some of the other districts. I think there's a lot that is in common. I think they all, though, have their other hardships. I don't know, Jonathan, Andy.
So for Franklin, as Bryan mentioned, his graph is Fund 10 and Fund 27, so I often like to put those funds together too, because they really are, in my mind, the 7 to 3:30 school day of a child. We have approximately 85% of our budget is kind of what I call fixed costs, so that's staffing, retirement agreements, transportation agreements, and utility costs. So all of those things are required. Now the one kind of question there is, do you have all the right staff in all the right places? That could be asked really anywhere. But again, the vast majority, 85%, is kind of in those fixed costs, or if we don't provide transportation, we're not complying with state law. If we don't have utilities on, we're not heating the building, children aren't going to learn, type of things. So we have roughly 15% of our budget, which equates to what I call kind of the malleable portion of the budget. But some of that is technology infrastructure, some of that is curriculum, some of that is simply salt and plowing for the buildings and grounds department, right? So even inside of that 15%, not all of that is able to go away either. So if we decided we just weren't going to salt this year, we're probably going to have a lot of slips and stuff happening in the parking lot, which is going to increase insurance, potentially liability costs. So even within that, there are pieces that are just really hard to mold and say we can just totally slice this off and we're going to be okay. But I would argue that all three of us, I'm sure Pat sitting out in the audience, who's in our similar position, probably looks at all of those pieces and says, where can we make changes? Or Bryan and I were talking about a zero-based budgeting process with some of our people, and making sure that they understand at the beginning of the year you're given $0 for your budget until you can actually tell me exactly what your dollars are going to go for. And so having that process in place helps me ensure that our directors are really spending the dollars on what they say they're going to spend the dollars on, and have a plan for that, versus we need $500,000 and because it's next year we need $520,000, but you can't tell me what the extra $20,000 is going for. So it's possible that they might need $520,000, but please tell me exactly what you're planning on spending that $520,000 for. So again, the budgets for school districts will look similar. There are going to be some differences. Certainly this rural school district is going to spend more on transportation than, Jonathan, you mentioned St. Francis probably has zero transportation or very limited transportation. So there'll be some differences from rural to suburban to urban. But again, it's going to be very people heavy everywhere we go. Did you have anything to add, Jonathan? Okay.
Yeah, so the next section here is enrollment trends, and whether you're talking about our public schools in Wisconsin, or we also do a lot of work with school choice and charter schools. This is something every school in the state is going to have to deal with in the coming decades. We've seen, as we'll see in the slides here subsequently, but I'm sure everyone's familiar, our long-term trends in the state are not too positive in terms of enrollment, and there are a variety of reasons for that. Right, we have a overall population of the state that's not growing. We also just have fewer people having kids as well. But now we're sort of going to discuss what are the implications budget-wise long-term for what we're seeing in terms of enrollment trends.
So what we're seeing for enrollment trends, and you can see independent, homeschool, private, and school districts going down the side. This is just the distribution of students in the state of Wisconsin. Again, the vast majority are choosing public school, but voucher schools have picked up a significant portion of that. I would say probably over the last 10 years or so, especially with the voucher schools being added. And then homeschool independent charter schools take a much smaller portion of that, but they still do exist. What we're seeing on this particular graph, is school districts and by their location, whether city, suburban, town, or rural. And you can see that in 2022, significant amount were rural, but enrollment is really stacked inside of those urban districts. That's pretty common, right? The significantly more people are living in an urban area. That's why it's growing to be an urban area. So I don't think there's any big secrets here, but our rural school districts actually encompass significantly more portion of the state. So when Bryan was talking kind of about his distribution, a lot of those are going to have those higher cost needs for transportation and things like that, and look to be sharing between school districts as well, because educators are much harder to find when we start thinking rural areas than they are going to be for urban areas, especially in those high needs areas, special education, high level science, technical education. In this graph, we're just taking a look back to the 2018-2019 school year and projecting out to the 23-34. You can see we'll have an estimated decrease of 7% by 28-29, and we're continuing to just see that decrease. And this is also our public enrollment projections. Long-term, all school districts are seeing that decline. Oops, sorry. This is a district enrollment projection that we did 2 years ago in Franklin. So we worked with a vendor who has a little bit different process than to take what was your kindergarten last year, and we're going to project that forward to first grade, and then we're going to take a look at 2 years ago and see if there's any comparison from year to year. What this particular group did is they took our school district in Franklin and they divided it up into 57 or 59 pockets. And they determined pockets kind of like subdivisions, or if they're divided by busy road, Rawson Avenue or Highway 100. And they start taking a look at what is the actual turnover inside of these pockets. So what kind of people are living there now? Are they young families that have young children, or are they people who have their children have aged out? And they start putting that into calculations, again using actuarial science to determine what is the turnover rate for this particular area versus this particular area versus this particular area. Then they put that into a heat map of where they project student growth for each individual element. We have 5 elementaries, we have 1 middle school, 1 high school, so the area of growth at high school and middle school doesn't matter, but it does matter at the elementary level. So you can see in the upper right-hand corner, we have a whole bunch of blue. So for us, that's telling us where that elementary school is. We're looking at a decrease in students. And if you look in the lower left, that is a hot map. And we're looking at that elementary school going, what are we going to do in the next 5 to 10 years? Because that seems to be growing like crazy. They take all of that data and they break it out by school for us, and they provide it for our next year, which it's currently 24-25, but when we have this done, would have been our next projected year. And they project several scenarios going out. And you can see in that second line, Countrydale Elementary shows yellow in 2030, 31. That means like we're really tight at the seams, but we could still make it work. When you get into red, means you physically do not have enough space to put every child into the building. So what this told us in Franklin was our 5 elementary schools have enough space, but they are just not in the right places where the kids are going to be. So you look at that from a school board standpoint and say, do we need to build a new school, or do we need to reboundary? Like that's really now the discussion. And then that's the question a school board's going to take on, because those are 2 very different things. So what this helped provide us was a verification, because we felt we had enough space, but we knew that, again, that lower portion of that graph on the right side was red. We know there's a lot of growth there. We just aren't entirely sure when it's going to be. So this helps give us that idea that we're going to have a decision made in the next 4 to 5 years of what our plan is, so that by the time our school is over capacity, we're enacting that plan and ready to go.
So I'll just ask there. So obviously we have districts that are dealing with different, phenomena in terms of enrollment. With your district there, it's relatively stable, right, compared to some of the other districts in the state. So I'm interested in everyone's perspective in different, different parts of the state. What are you seeing in terms of enrollment, and what are you looking at in terms of what are the implications for the long-term trends?
I think the data shows that decrease in enrollment is that all districts are having to reevaluate. And if you're in the middle right now of budget building, you're probably having the conversation about staffing levels and whether you're needing to make changes. And then if you're not in a district that's talking about school closures, there are a few that are in the area that are having that conversation as well. And that's looking at those enrollment trends, thinking about capacity, and to Andy's point, like Franklin is not the norm statewide that you would have a growth surge in part of your community. What you're seeing more so is that there's a slow decline across the community. I'm in Greendale, which is very landlocked. It's next door to Franklin. And so we see some of the housing market kind of tightened up at the moment, and it's harder for young families to get into our community. And we're seeing some decline in enrollment just on that. And then that has an impact on staffing. And so those are going to be the main conversations. Where are you in terms of the capacity of your schools versus student enrollment? How is that impacting your staffing trends? And so what's really important for our school board is when they set their budgetary values that we're focused on ratios of class size. And so on a year-to-year basis, we have to make decisions and reevaluate with our staffing model based on those class size targets. And we have to continue to do that on an annual basis.
Yeah, I'd say the one thing that I've seen certainly is more on the declining enrollment side for some of the rural districts. There is an example that we have with one district where a heavy amount of open enrollment this is an example where there was a curriculum change on the more urban side, so a lot of folks came out to rural to get their kids educated. What happened is those families went through the system. Now that open enrollment and that revenue source declined dramatically. We've also seen just more in the northeastern side, just more transitory population is interesting. Some of this trend has to do with, lock in with your heating bill rates, where people will come in and out of a district. So there's just some interesting phenomenon around that. Sometimes it's just really hard to predict your enrollment.
So I have a couple of points, and one of them, I did a quick analysis last week. So when enrollment is declining, does not always match expenses. And so if we were to take a look at, it's probably 10:30 right now. So if we were to take a look in Franklin at 10:30 and pluck 2 students out of every classroom that has kids in it right now, we're probably down about 750 kids. And we haven't shed $1 of expense because all of the teachers still remain. The heating is still on, or cooling, depending on the day. The lights are still on. We maybe saved some pencils. We maybe saved some sheets of paper. But we lost about $500,000 in revenue or so with that loss of 750 students, but again, haven't shed a single expense. So it takes a period of time for districts to lose that enrollment till they can actually consolidate and restaff to actually make that particular piece work. The second, this is anecdotal. I don't have any evidence of this, but what I've noticed over the last 10 to 12 years in working around in the Milwaukee County and working around other school districts is that surge of moving from urban to suburban, and then it continues to migrate out. So the communities closest to Milwaukee saw that surge first in students, and then that surge is starting to move its way out as that decline is moving wider. My guess is that's happening in Dane County. My guess is that's happening probably around Green Bay too, is that those suburban school districts are starting to fill up, but then that second level of suburban school districts are starting to fill up. So Franklin is probably the second wave, Muskego and Mugwanago are starting to be that third wave for us as people start continuing to migrate from those particular districts.
Just one more question on that point about the sort of fixed costs, right, and versus variable costs over time. What role does the 3-year rolling average play in that in terms of the county of kids partially for 3 years? Maybe give a brief explanation of that, and then what role, if any, that plays in there.
Yep, so as he described, the revenue limit that Jonathan was talking about earlier is built off of a 3-year average of your resident students. So what that does is provides a smoothing out period. So if you have a dramatic drop in students this year, and say we lost all 750 of those students and we couldn't shed a single teacher, it's going to give us some time to figure that problem out. because if that happens on September 1st, like there's not a quick fix coming on September 2nd that solves that problem. So we need some time to help solve that problem. And so that 3-year rolling average provides a little bit of buffer to solve those particular problems, whether that's changing class sizes or not having as many staff in some different areas that you might have them, gives us that opportunity.
Great, and the fourth area we want to discuss is probably the most critical for you folks here today, which is what role, and what are the responsibilities for us school board folks in this process. And I'll just, since we want to make sure we have time for questions, we'll just roll right into that.
You bet. So in one of those Jeopardy questions talked about financial reporting and monitoring. So we just have some things we'd want to make sure as a school board or a school board member that you are aware of. You should have a preliminary budget. Again, that does need to be approved by July 1st. If that's not the current practice in your district, you should take that back because, again, technically you cannot pay people and technically you cannot pay an expense after July 1st without the approval of a preliminary budget. It's important to note that that budget obviously is not set until state aid is verified on October 15th, and then at some point prior to the second Tuesday in November, the school board will approve an official final budget. One of the pitfalls of the way our current legislative session is that October 15th general aid. So we're about 25% of the way through the school year before we've entirely verified all of the revenue that's coming in. So that's kind of an awkward model if we think about how a private entity would operate or a private business versus this public business. Budget hearing and annual meeting, it's a great place to get some public feedback. And we are going to be short on time, so I'm probably going to pick up the pace a little bit here. Again, audit. Make sure that that is being brought to the board, reviewed, and specifically around if there's any findings and how we're going to correct those, and that goes to that corrective action plan. Audited financials are really important. That monthly financial reporting, very important. A couple of things just around fund balance. As we mentioned in the Jeopardy, you should have a fund balance policy. There's really a couple of pieces here, and the non-spendable one is really the most important one because that is your cash flow to help you get from July 1st to June 30th. As you know, atypical of a normal business, we have irregular revenues. So we have property tax that comes in heavy in January and February. We have state aid intermittently provided throughout the year, so it's not like we're getting 1/12 of our revenue in July, 1/12 in August. So that unrestricted fund balance is probably where I should have went with that. Unassigned is that key component. And there's a couple of others in there. Restricted fund balance. If you're self-funded health, you might have dollars in a restricted fund balance account to help offset that. Assigned fund balance, the board might be approving a certain use of fund balance for a particular project, so you'd want to move that into assigned to make sure that there's a board action that's approved to that. And then committed fund balance could be something as simple as supplies at the year end. So buildings and grounds have tons of supplies. There's a quantifiable way to verify what that is, but that's already been spent. It's already just sitting there. So it's, in my mind, a stack of toilet paper or paper towels is not really fund balance. It's simply a supply, but it has to be listed in terms of fund balance. Importance of appropriating fund balance. Again, it is a local decision, but its main purpose is really to avoid short-term borrowing if you can. So cash flow, right? You're paying the bank interest or paying who's ever lending you funds interest to use their money to cover cash flow. So the number one concern always for us in Franklin is can we make it between all of those revenue peaks and valleys is a key component. And then I'll go to the bottom one. It demonstrates financial stability. And most recently, we passed a referendum in November. We went to bond in April, and our bond rating increased because our fund balance held steady for a significant period of time. And the key thing about increasing that fund balance was it saved us approximately $18 million in interest on that bond, which is a direct impact on the taxpayer because they pay more principal and interest. And so for us, that was a big deal and something I was super happy about, and I had no problem not necessarily bragging here today, but talking to these guys and bragging to them that we increased, and that's super awesome. Just a couple of things here regarding the research around funding levels in education. The strongest benefits come from a well-rounded early childhood education. So Bryan had mentioned if students typically come there and have a good experience, they're staying. So that 4K program you might be offering your kindergarten, you want kids to come in early because if they come and they love it, they're probably staying. The best interventions often do cost money. What we've seen really since COVID is a mass transit of people out of education, whether they're teaching at a private high school or a private school or they're teaching at a public school. People are leaving education just in general. So it does take something different than it did 10 years ago to keep them in education. It doesn't take a windfall, but it does take something different. And then again, reducing class size, if that's the avenue you want to go, that means more staff in order to do that. It might even mean more facilities. Do you have enough classrooms to actually reduce staff or reduce class size and make that work in your buildings as well? So that's another one. From a special education standpoint, currently we're funding special education. Again, it's supposed to be 33%. State's funding it at about 30, which means the cost of every student with an IEP is being funded by 70% district funds, which means we're taking funds away from every child to fund to specific children. All of those children have those needs. They're going to have those needs taken care of, but it does take away from things we could potentially do in other areas. So again, advocating from the standpoint of really making it provide funding levels that are adequate for all kids in your school district. And the biggest thing I'd probably move to make sure that we have enough time for the Q&A is you should advocate for your district. That doesn't always mean you're advocating for money, but you should be advocating for the kids in your district to try to make sure that you're providing the best education you can. And again, not always money. Sometimes it happens to be, but it's advocating for those kids and making sure you're doing the best you can for however many students happen to be in your district.
So I think we had a referendum section here. I think everyone's pretty aware of the the phenomena of referenda growing around the state. So we'll make sure we leave time for Q&A by maybe just leaving that in the slides for folks to take a look at when you see them on your own time. But obviously, referendum rates have gone up over recent years. Is something everyone's pretty familiar with. I will ask one question, and then we'll move to Q&A right after that. Do we want to have a runner, Libby, like someone to take the mic around? Okay. So some folks on the conservative side, just to give a little pushback from the conservative perspective, we'll say, well, we're at about $18,000 per kid, right, on average in the state. Shouldn't that be sufficient? Shouldn't that be enough? And I guess just your guys' thoughts on responding to that.
So the first thing I would say in response to that, and Jonathan talked about it, when revenue limits were put in place in 1993, they've been set at that same rate or that same distance from a high level revenue district to a low revenue district from that period of time. And it all depends on what was going on at that time. So I'm going to give you a great example. I used to work in Oak Creek. In 1992, they levied a significant amount of money to build a middle school. They decided in 1993 that they knew that tax impact was high for levying for that middle school, so they reduced a lot of expenses, and then the revenue limit came in place, and they were locked in at that particular piece, and really a cost-saving measure. And you could just flip that year and say, well, in 1993 they were going to build that middle school, so they levied a high amount, and they would have been locked in there. And so what I would say in relation to that is those school districts have now been living in whatever revenue limit they are at for 30 years. So think about your life over the last 30 years and how that has been impacted, and what you're living today is kind of your expectation to meet, and changing that is significantly hard, right? So they've lived under a district with $18,000. So all of their things and components are in place. In their community, those are the expectations today of what that can all afford. Now, it's going to be different everywhere. Some have learned to live on $11,000. Some have learned to live on $24,000. But changing that is significantly hard. So it's really then putting in what is the value of all of the things that we do in the district, and are some of those expendable, and what is the repercussion of those being expendable, whether that's from the student standpoint or whether that's from the community standpoint.
Yep. So just 2 points on this. One is we talked about the $325 per student that was in the governor's veto. So that's not the legislature's model for funding of schools, right? So the last model that they created was in 1998. If that's going to be the model going forward, the question is, how does that index to inflation, or does it stay at $325 per student? And that's an important point when you're thinking about increasing costs. So you're going to have inflationary impact in your schools. That's going to run through. So that's one point. Two would be on special education. So we looked at what the trend's been over the last 15 years. We saw that big gap just in the revenue limit. But when we looked at that revenue spending per year versus special education costs, our special education costs have risen more than 6 times as fast as those spendable revenues have increased. And so that does put pressure on programming. It is linked to operational programming because you do have required services by law that you need to provide. And we want to provide really high quality programming to all of our students. And so if one area is increasing 6 times as fast as the other, it creates challenges in how you budget. And so that's why our board in particular wants to have those proactive conversations with our legislators about how to solve that and create a sustainable source of funding. Within special education, we get less than 10% of that from federal revenues, and that's short of the 40% that was promised in law in 1975. So it's significantly less, and that ends up being a larger share, ends up coming from that local operational fund.
So I'll just say that I'm a bit of a newcomer in school finance. This is my second career. What I would say is, in school finance, it's easy. You can take any kind of data point and you can use it to match your narrative. But what I would say is actually getting in and closer and understanding the variables internally is really important. So I guess what I would say is locally is get involved and get an understanding of what's happening, because it's easy to take a talking point at the highest level and take things out of context, if you will. I'll kind of wrap in some referendum pieces here. So I've had one district that I went through a referendum with, because of the way the revenue limit is set up, they've had to be on an operating referendum for the last 10 years. And a non-recurring operating. But once you set your operation on that, it doesn't go away. And there's choices that you can make in terms of non-recurring versus recurring referendum. This district chose non-recurring to continue to go out to the local community, local control, and ask, can we continue to operate as we have normally? And the reality is, we'll get into these kind of polarized discussions, but the reality is when you really dig in and understand, these schools need this funding. There's an aspect of the way we fund schools, and I realize it's probably not going to change in terms of the system that we use, but it's taking resources away from educating our kids.